Okay guys, going to get this trader mindset session underway. We would normally do this with a small group of the traders individually, so they could have like a Q&A session with our head of trading. But what I thought would be more appropriate, just because although we've seen some market moves more recently here across asset, but overall news flow has been pretty quiet, so I thought it might be pertinent to just get everyone else involved. So thank you for those who messaged in their questions, and I've got 9 in total from various different people. We'll start at the top. Okay. I've tried to put them in a bit of order so there's a bit of fluidity to the conversation. So question number 1 is, what was your own training process when you started? How did you get started, and what stages of development did you go through until you became what you felt was competent and then an advanced trader? So what's the kind of timelines that you how did you start training, and then the timeline before you progressed into becoming kind of more competent?
Okay, so I it was kind of a different era in many ways. So I started trading on exchange futures, very much like we're looking at here on the screen with your CQG ladders and stuff. I started trading that in October 2002. I left HSBC and I joined a US trading firm. So I had at that point certainly zero experience of short-term market volatility. I'd been up until that point looking at long-term, like 5-year time horizon asset allocation strategy, right? So I had no. It was a baptism of fire, really. So the training, I hesitate to call it training. What happened was they recruited. It was pretty aggressive, the firm that I joined, in terms of they were recruiting about 15 people every 3 months. As a group of 15, and we would be put in a separate room, so not on the main trading floor. We were put in a separate room and put on the simulator, and we were told that in front of you on the system we had 3 ladders. One was the 2-year German government bond future, one was the 5-year German government bond future, and one was the 10-year Bund. And they said, look, these things are going up and down, and they're bond prices, and see if you can figure out why, and see if you can figure out if there's a relationship between these different bond maturities, and can you exploit any inefficiency in the relationship.
So what was your knowledge about bonds at that point? Because you worked at HSBC.
Yeah, so I mean, I came from an engineering background, so I didn't learn about this stuff at university. Mm-hmm. I had spent about 18 months at HSBC as a very junior position, so a lot of that job was junior level. What I mean is kind of almost like admin support role for the main strategy desk. Some of that job was I had to do an exam to pass a qualification. So it was God, I can't remember now.
This was qualified to give investment advice.
Right. So to be able to talk to clients, I can't remember the name of it. My mind's gone blank. But anyway, I guess you would say that's where I learnt about financial assets, in doing that exam, which was kind of self-taught actually. So actually I didn't really know much about bonds, and then they sat me in front of a trading system that had these bond prices going up and down, and it was very much, you've got to figure this out. Can you figure it out? And I think actually there was no training per se. It was more about working as a group actually, and trying to figure out why these prices are moving, and can you figure out any patterns. They gave us some very basic charting lessons, but very basic, and it was very much, here you go, get on with it. The reason, because of that, people developed at very different speeds. After I for whatever reason happened to develop quite quickly, so I was able to be a little bit consistent. Let's say I spent 2 months on the simulator, and then they put me live with one lot. So this is where you move out into the trading floor. It's quite a big moment. Sat on the trading floor with your one lot, and then you it's like here, you've got to translate what you were doing on the simulator. You've got to translate that performance onto the real market, and it's entirely psychological. We weren't given any trading psychology education at all. It wasn't really well, that's not true. Actually, a friend of mine who was already at the company, told me to read Mark Douglas's Trading in the Zone, and he said, read that. He said, I've been trading for 5 years and I read it every 6 months.
Yeah, because one of the questions here that came from Dominic actually was any books that you found particularly useful.
So that book was my only exposure to trading psychology as a concept. I think I probably read it 3 times, probably in the first 12 months. I think when you read it first, with very little experience, you definitely take some interesting lessons from it. If, let's say, a few months later, having spent 3 months in front of these things trying to trade, if you then read it again, you can take a whole different bunch of thoughts from that book. It depends on your level of experience as to what lessons it really hammers home. It's quite a repetitive book. It can be quite difficult to get through it, but it's repetitive for a reason. It's just hammering in the kind of importance of self-discipline and psychology. So that was that was very much self-taught. We didn't really have any formal training on it.
Okay. All right, we'll just let's move on because there's quite a few to get through. So Mark asked, is there any morning preparation before the start of the trading day which would be useful in terms of trader psychology and mental preparation?
I think a lot of people like routine.
Mm-hmm.
I think routine's quite... Because it's... one thing about a trading day is it's unique, every single one. You're never going to have one the same. So you've got to, I think, to a certain degree, create some kind of fixed, regimented routine around a very unpredictable market environment. So that at least, and especially when you're losing money, you almost have a sense of security in your daily routine.
Yeah.
I think that can really help give you that foundation to then perform off in this uncertain environment. So I think whatever your routine is, some people like going to the gym, some people, I don't know. My routine is I do a bit of reading before I leave the house. I would read Deutsche Bank's read before I leave the house.
Mm-hmm.
I'll then read the FT on the way to the tube, and then then I'm into the office, and right now it's more about what's happened overnight. It's starting to look at the charts, going through a regimented technical analysis process.
Before you've even got to your desk, you've already got a mind's eye of what the charts should look like.
Yeah, for sure. Very rarely is it that you turn the screen on and the market surprises you. Yeah. You should be able to know, having read the FT, you should really be able to know how markets will have responded to these things, and so you shouldn't really get too many surprises. So you should have a reasonable, clear idea on market sentiment before you even sit at your desk, I would say.
I guess the routine thing sounds very much like sportsmen, right? So like Nadal, I don't know if you've seen tennis with his bottles, that he does that completely the same routine every match. Doesn't matter if it's the Wimbledon final, whether it's Doha, whether it's
So it's trying to get a sense of normality and regimented elements. So it's everything. That's something you can really hold on to, a foundation. So even though your trading might be going phenomenally well or phenomenally badly, you've still got something that's constant.
Yeah.
Which is a good kind of leveler.
Okay. Next question was, what techniques or methods do you use when going through a bad patch? I know this is kind of slightly similar to the last one, but is there, I guess this is more personal to the individual.
Yeah.
But I guess this is more a sustained, let's say, I know everyone has had it, certainly traders I've been around, where it doesn't matter how good you are, there will be a period that will be testing.
Yeah.
So how do you come out the other side of that?
So yeah, it's definitely personal. I'd say some of the things you might want to think about doing, very much separating time periods. When I first started trading, we always got measured monthly. So we would have a monthly kind of P&L. I mean, I knew what my P&L was every single day, obviously, and I was logging it and analysing it even. But really, it was about each month. So for me, when I got to the final day of the month, that was it. Then I get closure on that month.
Right.
Let's say I've had a bad month. Well, it's almost like a relief to get to that final day, and it's like, right, thank God I'm on the last day now, right, like that's behind me, right, new month, right, 0, let's go again. So I think it doesn't have to be a month, it could be a week. I definitely wouldn't say don't make it a day, that's too short term. I think you want to operate on a weekly basis, or even a week's good, because obviously then have the weekend. So you can break, you got to break away from the desk, away from markets, full stop, and it allows you to do other stuff completely unrelated, which I think gives you that time to deal with what happened that previous week. So Monday morning should absolutely be right, new start, 0. What's ahead of me is 5 trading sessions, and I want to finish that week with give myself every chance of finishing that whole week with a positive outcome. Okay.
Next question is, I guess it's taking that similar theme, but looking at it on more intraday and more trade specific, is from Chris. How do you cope with being right but losing money? So say like today, obviously there's, I was just saying to you before about the pound is at 168-year low. I myself, you can see quite clearly, I had a small CFD position on a break of pivot following the prevailing trend lower, which has been with strong conviction the last couple of days, and then you're on the wrong side of it. I guess for newer guys, it's kind of, I mean, you can explain better than I about the management of, you're right, that this pound will go down further ultimately, but the timing is incorrect. But how do you kind of deal with that?
It's definitely the hardest scenario to deal with mentally, because there's just a sense of injustice in it. You feel like you've been robbed, which of course leads you down the road of wanting revenge from that injustice, and this is where what was possibly unlucky, or sometimes you're just unlucky, sometimes you just you'll get stopped out to the tick, and then it does what you thought. That's just trading. That is definitely going to happen to you, and you just got to, I don't know, you've just got to accept it and know that you were a whisker away from a really good trade, but actually it's cost me money. It's just part of the job, and in the long run, these events will occur periodically, but in the long run, actually, they don't matter. I would say that it depends if you're unlucky, like the scenario I just said, or whether actually you've made a mistake. You can be right, but actually execute it badly, time it badly, and that's a different matter. That's you, and you've got to own up to the fact that I haven't been robbed there. I've actually just been stupid, or I've been slightly impulsive. I just haven't quite executed my process as I normally would. My timing's slightly out, and you just got to own up to the fact that you're being penalised for an error. And I think you've got to definitely take ownership of your losses. It's really, at the end of the day, it is literally nobody else's fault.
Yep.
That you lose money other than your own.
Well, coming from an analyst background, Piers, and having you listen to when I used to squawk, that's a lie. You come over straight to the analyst desk. I get a club round the ear hole. It's your fault. What have you done? Maybe not from you, but certainly back in the day of the proprietary trading world, my kung fu skills did come in useful at various points. Anyhow, the next question from Christian, and kind of similar from Lawrence. If you were to pick 3 of the most important elements of your approach to trading that allowed you to be consistently profitable, what would they be? I guess Lawrence's question was along the lines of, what's the best piece of advice that you were given?
So my boss used to tell me one of my best attributes was the way he would describe it was the ability to just let it hang out there.
Wow.
Yeah, no, I'm
glad I wasn't on your trading floor.
I'm not talking about that. What he meant by that was putting a trade on, and so therefore step in and put yourself in a position of risk, and then
let me get this straight.
And then
this has got Trump written all over it, Piers.
Step out there and put yourself in a position of risk, but then own that. Be okay with being exposed to risk. Be okay with the idea that I might lose money here, but you know what? I think I'm right, so I'm actually fine with the fact I could lose. And if my trade goes slightly offside to start with, I'm not freaking out. I'm not panicking. I'm not concerned. I'm not worried. I've got, I guess, that strength of conviction in what I do that allows me to be at risk of losing, but that's fine because I can't have an opportunity to profit without being at risk of taking a loss. You can't make money without risking loss. Yeah. So I think that was a strong one. I guess I think I was always quite good at dealing with the psychology side of dealing with loss as well. If I had a bad day or a bad week or whatever it was, I was quite good at coming back the next week fresh with not allowing that loss to impact what I do in the future.
I remember actually a conversation we had months ago about when you had your children, and that was actually when you were in the height of your kind of trading career in terms of size of positions and so on. And that was, for most people going through the period of having kids is, lack of sleep. There's the kind of, because I know from Will's point of view, having known Will for many years, he quite openly admits if he has a bad night's sleep, that's going to translate into a poor trading performance, and he knows that. Yeah. Whereas for you, it sounded like the opposite was it was a distraction. Yeah. Almost.
Well, there's nothing like, if you want a tool for taking your mind off your trading performance, then have kids. Because when you go, the point is when you go home, obviously your, let's say, small child wants your attention, and you're obviously happy to give it, but your child doesn't care if you lost 25 ticks in a euro dollar move I think it just helps you to divide your life. I think that's quite important for a trader, dividing your life. You've got your trading life, and then you've got your social home, non-work life. And I think for me it was always very, very important to keep those very separate, to help me deal. So when I'm at home, that's home, and I'm not thinking about trading, I'm not thinking about loss, I'm not thinking about markets. So I think that's
so at what point, so continuing that on, is like when you're new. I know my role in my early career was very different, because I had to go home and research was my main element. And so obviously different. I didn't have a girlfriend or a wife or kids, things like that, so I could focus. At what point then, because a lot of these guys are obviously more newer to the industry.
Yeah, that's a good point.
So you cross over between.
I think you get to a point where it's not like other jobs, trading, whereby normally in a normal job, the more hours, the more work, the more effort you put in, the more time spent, then the better the outcome, right? But that's not the case with trading once you get to a certain level of experience. But before you become experienced, you've obviously got to put the work in to get the knowledge to be able to become experienced. So sure, in the early days you've definitely got to be putting in the work, but I think it gets to a point where then it's about managing your performance. It's not about learning new skills, it's about managing how you implement your skills. And that then I think is important to really to be able to deal with the psychological roller coaster that is trading. I think having a clear division between your trading life and your outside of work life helps with that.
Okay, 2 more and then we'll wrap up. I think the next one's going to severely test out your political future of going into politics. From Mark, why stop trading full time, day to day, if you're a successful trader for a large bank?
Because I didn't aspire to be a trader when I was little. I have life ambitions that go beyond sitting at a desk clicking buttons and seeing a green thing at the top of my ladder and feeling good about it. I think I don't know. You often hear about traders burning out. I don't think I definitely didn't burn out. I just I was sat in front of a screen for 10 years, which is a long time, and sure, it was absolutely fantastic and great, but I had ambitions beyond that. I mean, when I was growing up, I either wanted to be a professional footballer for Tottenham, and I haven't stopped that dream yet. There's still time.
I can see the thumbs downs coming in on YouTube now for that sole comment.
But the other one was I wanted to run my own company. So I grew up in quite an entrepreneurial family. So my dad ran his own company. My brother then went on to run his own company. So it was always something I wanted to do, and I just didn't know what it would be doing. So firstly, I needed a field of expertise. And then, how can I create a company utilizing my expertise? So, I think I just have aspirations beyond being a good trader. Well, would be the quick answer to that.
New York office opening.
Yeah.
New employee.
Yeah.
So certainly on track, it seems.
Yeah. Absolutely.
Okay. Final question, Adrian. If you had, and we actually don't know who has won at this point, if you had won the 151
payrolls sweepstake,
the 151 million pounds on the Euro Millions last night, what would you have spent it on?
Can I just say, before I answer that, can I just say how I came up with the numbers? Vass claimed that he'd created an Excel spreadsheet model for computing randomly generated numbers, but avoiding like birthdays and all this kind of thing. So therefore, he basically said, if you take these numbers that he gave me, basically, if you win, you've got a much better chance of being the only winner, which kind of makes sense, right? So I used Vass's.
You got duped.
I got 6 lines. Okay. Out of all 6 lines, just the main numbers. So that's 30 numbers. I only got 1. That's 1 in any of the 6.
Okay.
And on the
Just to make you.
and on the star numbers, there's only 2 star numbers, right? And it goes up to 15.
12.
Does it go up to 12?
Yeah.
Okay, so I should have had 12 star numbers. I should have had all of them covered, but actually I only got 1. So your system is crap.
I won £2.40.
The moral of the story is never listen to Vass if he's claiming he's going to win you the lottery.
And secondly, I did lucky dip, and I got 2 numbers.
Did you?
So go figure.
There you go.
I got plenty. I won £2.40.
Okay.
What would I have spent it on? Staff bonuses. It spends. I you know what? I don't know, because that thought. I know. I have a rational and very logical and rational approach to the chances of me winning. So I did not spend any energy thinking on what I might spend it on, because I knew I wouldn't have it.
There you go. So basically,
That's the honest answer.
having low level of emotion is the key to successful trading. Okay, guys. Well, thanks very much, Piers, for giving up half an hour to go through that. We'll probably do something like this similar again, maybe once a month or so when there's a new round of trainees.
Yep.
But hopefully you guys found that useful. Hopefully it gives you a bit of an insight into Piers' kind of background and the story that he's gone through and yet to go through. And then, as ever, he's always in the chat room most of the time, so you always feel free to ping him a question if there's anything else to add.
Yeah, definitely.
Thank you very much, guys.
Cool.